Hi, and welcome to the Trading Bell Show. We are at the headquarters of East Africa Breweries to just speak to Risper Ohaga, the Group CFO, to unpack the numbers they just released their half-year results. So please join me in this conversation, but first, let's take a look at her profile. Risper Ohaga is the current Chief Finance Officer at EABL. She's experienced Chief Finance Officer with a demonstrated track record of transformational leadership, performance and delivery across multiple jurisdictions. She's skilled in driving performance, regulatory management, financial control, taxation, planning and budgeting, regulatory reporting, statutory accounting under IFRS, risk management and internal audit. She's a seasoned finance professional, experienced board and senior leadership experience, a CPAK, who also holds a BCom honors in accounting from the University of Nairobi. Risper Ohaga, welcome to the show.
Thank you. Thank you very much, Maina.
Good. It's good to have you. And I'm just keen to, first of all, just get your off-the-shoot thoughts about your performance in that half year that just ended. You announced your results and just want to pick your mind first, an open one. How was it?
I think we're very pleased. We're very proud for a number of reasons. One, the top line grew 16% in these tough times. I think that's very commendable. It's the highest growth, if I go back 5 years, it's the highest growth we've had in half one. So quite a strong showing on the top line. We also, in areas where we could control, we managed our cost well. So administrative costs grew 6%, well below inflation. And selling and administrative costs, which are our investment in our brands, we sustained that within the same level as the growth in sales. At an operating profit level, before adding the impact of FX and interest, we grew 6%. So again, some really good news. The biggest impact on our performance was the combination of Forex and interest expense, the two of them contributing 6.3 billion, and that resulted in our profit declining 22% from a profit after tax perspective. So I think a mixed bag, but a lot of positives in that performance.
Okay, great. Let's talk a little bit more on that and talk about some of the factors that influenced this particular performance. What would you attribute all this to?
So from a growth perspective, we saw really good growth in beer. Beer grew 18%, and that was really on the back of the holding of the annual increase in excise. In the past, we've had excise increase once, sometimes twice in a year. So with the last Finance Act, that was removed, and consequently we saw beer grow, and really good delivery of beer growth in the half at 18%. Spirits, on the other hand, continue to feel the pain of multiple excise increases. We did grow at 13%, but quite a tough day in the office, which is what we've said, the multiple increases in excise, in the end, they don't always result in increased collections. So quite happy with the growth in beer and the support we got to enable that. We need some more support around the spirits growth. But having said that, top line growth, very, very strong. Inflation on cost of sales was tough. Last year, you'll recall, we had about 61% ethanol inflation, largely on the back of scarcity of ethanol in the local markets. We were able to source ethanol locally in the past. And so after 61% increase in 2023, we had another 15% increase. So that's really tough. Sugar went up 35%, fuel 39%, so glass 15%. So inflation really, really aggressive, resulting in our cost of sales going up 21%. Again, I've touched on costs, very well controlled, but also then the impact of the macros, so depreciation of the shilling, as well as rising interest rate coming in to impact the bottom line. Okay.
I'm interested to find out, because looking at the situation we're in, as you've mentioned, some of these macro effects that we have, and even, your end consumers were being affected by the inflation levels and all that, and yet your sales were a bit up. I don't know, what did you make out of this?
I think it's twofold. As we said, if you look at our growth, it's at a reported level 16%. some of it is the impact of the Kenya shilling weakening against the regional currencies. So when we report the performance of Uganda, Uganda is reported as having grown 31%, but the real growth is about 6%, just because the shilling has weakened, the Kenya shilling has weakened against the Uganda shilling. When you again look at Tanzania, growing reported at 9%, but declining 5%. So the reason we're benefiting to some extent from the translation of Uganda shilling and Tanzania shillings against a weakening Kenya shilling. So whilst the growth is still good at 9%, we're being helped by that depreciation. Secondly, we have seen the customers being impacted. The amount of share of wallet that is being spent on our products is 5%. Before COVID, it was 7-8%. So you can see that the customer is feeling it. You can see that they're down trading. But I think we are doing our best to make sure we cater to the customer, cater to their changing needs. And we're actually still doing quite a lot of innovation in our microbrewery, and really focused on where there's a customer need that we meet it. And that is how we support our growth. Having said that, in the last years before COVID, we invested in capacity in Uganda and Tanzania. And that has been able to support our growth in those markets as well.
And the reception is great?
It's good so far.
Excellent, excellent. I have to keep my promise to one of your customers, actually not customers, shareholders, who told me to ask Risper. They noticed that their dividends are a bit low this time round. I'm sure there were factors that led to that. Please, if you could kindly elaborate for them.
Yeah, I think it's, when we think about dividend, we think very carefully around the shareholders, not just their cash today, but their long-term growth in earnings. And one of the things that we were thinking about is that whilst we had good cash flow, our cash flow position was quite strong at 10.7 billion, 6 billion above the previous half, which was really very good. But having said that, when you look at the environment, the risks that are coming, particularly with the rising rates, it's really important that we put some of those cash towards paying down debt to protect the P&L. Also, when you look at the volatility in the macros, I think we do need to watch and see how the full year turns out before we make any big pronouncements around dividends. So it's not closed chapter. We do spell out our preferred payout, but we also have to bear in mind some of these dynamics that mean that you have to think about the future of the business and protect it from things that will impact the bottom line significantly. So we're still committed to the shareholders. We're also committed to their long-term benefit.
Excellent. Let's talk about your markets, and I'm sure you have mentioned a few of them here. And I'm curious to know which ones are recording more growth, of course not just based on the shilling exchange, but looking at it from just the ground level. Which ones are recording much growth, and what are you foreseeing?
Kenya has been good. As we said, for the longest time, the imbalance in our taxes meant that we struggled to grow in Kenya, but we turned out 10% growth in Kenya is pretty good. Around about 6% in Uganda is also fairly good. They've been growing huge double digits in the last 3 years, but they've really still come across quite strongly in Uganda and across the piece. Tanzania, there was a bit of a shake-up in the market. We took price last year, and we've seen some decline in the numbers, so about 5% at an organic level, but very encouraging recovery from the price increases that we took to counter inflation.
I know this is quite a cautious one, but you're headed towards your full year results, and sometimes you have to put your eye on it, and the macro effects are quite clear. If they remain constant the same way that hit you, what would you expect?
It's a tough one, and we shy away from trying to, read the crystal ball. But I think what we can say is we always remain focused on delivering our strategy, listening to our consumers, investing where it makes sense to do that, and managing what we can manage. So what we can control, we're on top of it. Things that are outside of our control, we have to weather the storm. So I think, we are well positioned in the second half, and we are very determined to take advantage of every opportunity that comes our way. From a customer's perspective, who, for them, they don't really worry about what's happening up there. For them, it's the drink on their table, which they have seen significant increases happening.
what's the word for them? Is there a diversification maybe plan in the offering of something of that sort, so that at least they can enjoy their drink with what they can afford?
Yeah, I think it's a tough question. Everything has gone up.
Yes.
Everything from your bread to anything and everything has gone up.
Yeah.
So I think it's the reality that we face, that the cost of doing business has gone up significantly. And whilst we continue to innovate to cater to the different segments, it really is a challenging conversation from a consumer perspective. We want to land the products, but we want to land them in a way that makes sense equally for other stakeholders, shareholders, government, etc. So I think we're doing our best to make sure we are as efficient as possible. But the reality is there isn't a single item whose price hasn't gone up in the household today.
Okay, fair enough. So just brace yourself, adjust as well. Let's talk about the big thing, which is the elephant for me in the room, and it's the Finance Act. And we saw those changes that happened, especially to several manufacturers. And we're talking about the Excise Duty Act that compelled, especially the beer manufacturers, to remit excise duty collections to the taxman within 24 hours. Some of us sat back and were like, wow, how are we going to hack this? So I'm curious to know how you are doing it, and how has this as well impacted how you operate it?
Yeah, I mean, we've talked about it extensively through the half. And really it is, when you think about the intent and where it started with the betting companies, and really companies that are highly tech-based and they collect instantly. That makes sense, easy to audit, easy to validate. However, for manufacturing, it is difficult. Administratively challenging, excise is on consumption. If for us, you have to produce the goods, you have to cost them, and the minute you remove it from the store, you then pay the excise tax, but you've got to reconcile when do you actually sell them, and therefore how do you adjust. So it's administratively hectic, and it's costly financially because it disrupts your cash flow management, because we sell to distributors on credit, and they also send to retailers. They then sell to retailers, often on credit. So that cycle before the money comes back to us and the consumer has consumed means that you have a working capital break, which tends to be quite costly, particularly when the interest rates are rising. I think the intent was to address illicit. I think what has ended up happening is that those who are already paying tax are hit even harder. So I think it's one that needs to be reviewed.
Talking about your working capital, so how have you been managing that, noting that you're giving these things out in credit and you still have to have your capital to work?
Well, you've got to tap into your credit lines is what you have to do. The last thing you want is to cross the Revenue Authority. We also believe in running a compliant business, so doing the right thing, being compliant is important. So that often means that you have to have some short-term tapping into headroom to be able to balance out the timing of the cash flows. So it's one thing that from a manufacturing industry perspective, I think needs to be looked at. There are sectors where it makes sense, where you've collected in advance, but for us who haven't collected and whose accounting process is quite complex, it does need a relook.
Excellent. These are policymakers and they have an ear, and I'm sure you have said you've been talking about this. I don't want to preempt anything that could be coming forward, but are there some good headways towards this conversation, at least so they can understand your nature of business?
I think so. I mean, policymakers, they understand. They understand. I think it's just the mechanism of how to resolve this, given budgets are once a year. So I think policymakers, in hindsight, they understand that it's not increasing the amount of cash. It's extremely cumbersome administratively, and it's costly. So I think, and I hope that with all the trade-offs they need to make, that this is one that they elect to make it easier for the manufacturing sector.
Looking at companies quite similar to you, I mean, beer manufacturers across the globe, looking at the operating environment versus how you are here, how would you compare yourself?
No, I mean, it's rather consistent, to be honest, and you will see some of the announcements across. There generally is a global downturn economically, so more or less the same situations are being faced. So I don't think we really are an outlier, but I think we need to be careful around the choices that we make.
Okay.
In times like this, you want to encourage production, you want to encourage manufacturing, you want to create jobs. And to do that, the things you need to do to make it an enabling environment. So we are hopeful that we will do the right things to create jobs for our market, to reduce imports and increase exports.
Okay.
And that will come to bear. But I think we are all sort of facing the same level of challenges and responding to them accordingly.
Okay.
Yeah.
And finally, as you come to a close, looking at your CEO, looking at you, women-led company, amazing. I mean, it's celebrated across the board. And there could be ladies out there saying, wow, Risper. In fact, there's one who asked me to ask you this question. So it's more of an encouragement. And what does it take to be who you are there? So please go ahead.
Wow, tough question. But I think, I mean, it's no different from what it takes from a man. Yeah. I think your ticket to the game is your competence. You've got to put in the work, you've got to get the experience, you've got to work hard, you've got to engage. You've got to build connections with people that will help you up. And I think it really isn't rocket science. You just do the work.
Do the work.
Yeah, you do the work.
Thank you so much for your time, Risper.
Thank you. Thank you, Maina.
All right. All right, there you have it. That's Risper Ohaga Genga, EABL CFO. Of course, speaking and very optimistic of the future, and of course for you, the customer, that things are going to be all right. Thank you so much for your time. I leave you now with the markets.
My name is Risper Ohaga, and I am the Group CFO at East African Breweries PLC. If your company had a theme song, what would it be and why? Definitely Celebrate Good Times, because we celebrate life every day, everywhere. What's your favorite book and how has it influenced your leadership style or mindset? My favorite book right now, because it changes, is Difficult Conversations, just simply because it addresses everyday difficult conversations that are quite effective in managing your day-to-day life. What's your favorite way to unwind and relax after a long day at work? I sleep and I read. If you could swap places with any employee in your company for a day, who would it be and why? Maybe quality control, because they taste the product. What's the best piece of advice you've ever received and who gave it to you? The best piece of advice I ever received was from one of my managers who told me that life has seasons and every season eventually comes to an end. So you have to recognize your season and act accordingly.